Welcome back to the live room. Happy Thursday. I just got done trying to get out of a conversation, trying to get out of an argument, and the person just wanted to keep arguing. It was a good old-fashioned conversation about some guy was saying, technicals don't matter and blah, 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 blah. And that's no longer a battle I fight. Do you guys fight that battle anymore? Do you guys fight the technical versus fundamental battle at all? Where it's like, which is better, which is more important, technicals, fundamentals? You guys still see yourself getting into arguments with that? Yeah, I used to, back when I started, when I was very prideful about technical analysis and my trading style. And I thought, I was under the impression that there's one right way to trade and you should convince everyone to trade that right way, try to save the world by yourself mentality. Right? It was the, what's the name of what's the old video game thing where the guy runs in by himself? I think it was like Warcraft. You guys remember that at all? No? You don't watch the funny stuff. What was the guy? Oh, man. It's a video game. They're having a conversation. They're trying to beat this level, and they're having this big strategic conversation, and the one guy just runs in guns blazing and just throws everything out the water, try to save the world himself. It was one of those situations. But so I'm talking to this guy about, he's saying technicals don't matter and blah, 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 and blah, blah. And I was like, he said, I gave the kind of the coach talk answer. Not Max Payne. That was a good game though. We need some gamers in here. They would know exactly what I'm talking about. But we're having a conversation, and I'm like, you know what? I'm not. I said I no longer get into the battle about fundamentals and technicals. I understand that there are a million ways to make money in the market. Whatever your philosophy is your philosophy. And I thought that ended it. And then he comes back and tries to continue it. And it's just like, when will people understand? When will people understand? All right, welcome back. We kill some time to let people chime in. Let's start off by taking a look at the economic calendar. We should have a Bank of England press conference going on right now. Or maybe not a press conference, but Governor Carney speaking. I'm not sure if that's done or not, but here's what our calendar looked like earlier. Tobias says, waste of energy. Yeah, I tried to back out of it, Tobias. I tried to back out of it. I said, at the end of the day, all that matters is that you can be consistently profitable. Can't see screen. Please share again. Yep. Okay. I will unshare and share it. That's what I was waiting for. But here's a look at our economic calendar. Again, Carney should be speaking right now if he's not done already. We have our normal Thursday unemployment claims coming out for the U.S. And then later tonight, we have for Australian dollar a monetary policy statement. I had dramas. Yeah, I typically I'm on Chrome right now using it. I used to Firefox used to be my go-to, and then that kind of stopped working. So just try different browsers. Click Meeting is funny. At one point it was Firefox, at another point it was Chrome. So we'll see. But let's get started today at the euro dollar. This was a pair that was on my radar this morning. And really it's a follow-up from what we looked at yesterday. Now, if you remember here on the euro dollar, it's going to be somewhat of a review because you guys should know this already. But identify what have we recently done here on not the daily, right? The daily we've held, but what did we do on the 4-hour here, if you guys remember? We'll dip to the 4-hour in a little bit. We held here on the daily, but remember we went to the 4-hour and we had the lower low, lower close, right? This was somewhat of a dilemma. However, we had that smaller zone that we want to pay attention to below it as well. And what we recently did was we broke and closed beyond that lower level of kind of minor structure and then came back up to retest. And this was something I was watching this morning up until probably about 6:30. That's when I stopped my technical analysis, right? So we created something like this, right? And again, we don't have the daily confirmation, but we came down here, we broke and closed below our most recent low, which is the most important one. But we had this sneaky level looking left that we wanted to pay attention to. We were traced off of that. Then we slammed back down, as many pairs did last night, to break and close below that lower low before coming up to retest previous structure highs. You can see the rejection that happened up here already. This may have been a trading opportunity on the lower time frame. Again, I wasn't watching this on a lower time frame, but we'll see, and maybe it's a trading opportunity we can look at going forward in projection of a move down. Now, if we go down, we do have a potential bat pattern lurking down here. So if we take a look at this being our X to A, swing low to swing high, and we bring in our little triangle tools. I'll just use this. We're looking at a swing low to swing high, X to A to B, B to C up here, and then a CD completion down at about 110. Was that 110.13? Sorry, it should be up here. 110.13s. So heading down to the hourly, I'm actually going to kind of shift to my ninja charts because I do like these better. If we head down to the hourly, we load it, and we load it. There we go. Head down to the hourly. You'll see that we're working, excuse me, working on a lower low, lower close. Again, just to kind of recap, if I can zoom things the right way. Price action has done this little dance. We've come down. We've come up. We've come down. We've come up. Retested those highs. If you get a lower low, lower close, this could be an entry reason for you. Now, the problem with this is we have some pretty big candles. Yeah, this would be on the close. Yeah, and that's the problem. Unless you're a trend following trader, meaning you're not shooting for just a retest of this lower zone first. If you're shooting for an extension, it's going to be hard to get a quality risk reward, right? Because let's say we close right here. Stops are going to be above this swing point, right? So our ATR is about 10 right now. This is 110.91. Stops are going to be above the 111 even handle, right? Somewhere above here. Which means we're looking at a stop loss that looks like this. And again, we don't know where this candle is going to close. It can close higher, it can close lower, but we're just kind of predicting at the moment, right? So we're looking at a stop loss that looks like this. If we copy and paste that to get a 1-to-1, again, we don't require a 1-to-1, but I know many of you guys have that as a minimum requirement, right? If we copy and paste that looking for a 1-to-1, that 1-to-1 is going to come beyond that structure-based target location. So it's going to be hard to get a 1-to-1. Now, if you're a trend following trader, if you're someone that's shooting for an extension, that's a different story, right? Perhaps you're shooting for a 127 or a 1618. This is a perfect Fibonacci failure strategy, by the way, I believe, or trade, I believe. Just going back to like 10 years ago in my trading strategies. But yeah, you can see 1-to-1 would actually put us right to a 127 extension. So depending on how you're handling the situation, may determine how you may determine if you can get involved in the trade. Just curious, this looks like a perfect fib failure. And you guys remember the fib failure strategy I talk about from time to time? Oh yeah, look at that. Nope. It was one of the very first, give me a second, get a little juice here. It was one of the very first strategies I traded. And the reason I chose it was because I was looking for the quickest way possible to make money. So I was looking for just by far the easiest strategy that I can pick up, right? The first thing that I traded was like AB equals CDs because all I had to do was copy and paste something. And then I thought trading every single ABCD would be awesome. And I found out that it's not that simple. Fib failure was the second one because all I need to do was identify an impulse leg, a directional move, and then identify the 3D2. Now, the big problem that I had, right, this is a trend following strategy. I didn't know how to identify a trend. That was my biggest issue. So it's always hard because we want to go back. A lot of us will go back and we'll say like, oh, the strategy didn't work, right? The strategy didn't work. I used to trade the strategy didn't work. I actually don't know if it worked or not. Because in hindsight, I just wasn't using it right. Again, I was trading a trend following strategy, but I couldn't identify a trend, so I was just trading every 382 retracement. Who knows if I actually would have filtered it the right way and only traded them when it was within the trend? Who knows how it would have done? That always interests me, and that's why you also find me going back to a lot of my older stuff. I kind of worked my way backwards, so a lot of my older stuff like wedges and flags and head and shoulders, I used to trade all of that stuff. I just traded it back at a time where the what mattered before the where, meaning I was just looking for any head and shoulders, any flag pattern. I didn't really care about making predictions in the market. I would just kind of like, ooh, I found this thing. It looks like what I saw on the internet, so let's trade it. So that's always interesting. I think it's cool to kind of revisit some of the things that you used to look at in the past once you have a new mindset. I believe that's what Jason Greystone did with his FTB, if I recall. It was something that worked for him in the past. And then when he learned how to actually trade better, he kind of made some adjustments to it based on his newfound knowledge. And I think that's pretty cool. So if you did something in the past that you thought was okay, but it didn't work, maybe worth testing it out, and maybe you have more knowledge to add to it. But it was simply like this. You identify an impulse leg, so it will move in the market, impulsive move in the market. You draw a 382. And then if we hit the 382, you trade it. Now there was a I can't remember the entry technique. I think it was a lower low, lower close. So the entry would have been right here. And you trade at the 382. If price action hits the 618, this is where it's invalid, and then your stops go right above the 618. So in this case, not sure if it would have given me a 1-to-1. This case, stops would have been about right here, just because the stops were just fib based. If I were to go back and do it, I'd have to test it obviously, but I'd probably make it in line with everything else I do, which is the ATR. And then targets would have been the 127 extension of this move. So you would have something like this. Target 1 was the 127. If I can just zoom up a little bit, target 2 was the 1618. And that was it, guys. You see why I traded it? Simple. Simple. Now, the other problem was, aside from not knowing what the actual trend was doing, was that there came a dilemma. And the dilemma was this. What does this look like? Yeah. So this is a double bottom. This is R side divergence on the double bottom. I guess not. Yeah, R side divergence. I would also see this, excuse me, and I would scare myself out of trades because this looks like a counter trend trading scenario, right? Does it not? So then I'd be in that situation where it's like, oh, I got a counter trend signal, but I'm in a trend continuation trade. What do I do? And however I felt on the day is how I would typically react, right? If I had some type of confirmation bias that I had to buy the dollar, then I would hold it. If the news told me that the euro was strong, then I would sell it, and there was no consistency. So I would really, instead of taking targets consistently down here, a lot of the times I would take them out here. And you can just see what that does to your risk reward. And then my wins weren't covering my losses because now my average win is this, my average loss is that. And the normal psychological mistakes that we make, right? That's one of the reasons, by the way, too, if you guys notice with double tops and double bottoms, I use a 3D2 filter. It's because of this. This is the reason I use that 3D2 filter, because of that fib failure strategy. So cool stuff there. But yeah, so if you're looking for risk reward, is going to be tough unless you're looking for a continuation. So there's two options. We can drop down to a lower time frame and maybe see if there's another way to get involved. I bet on a range bar chart there probably was a way to get involved here. So we can kind of do our hindsight trading and say, how could I have gotten involved in this move? Another way would be to wait for a new close and then reset the process, right? Just like we did here, right? Wait for a new close, then a new retest, right? And just be patient. If a double top or bottom is not a valid double top or bottom for me if it comes back to hit a 3D2 Fibonacci retracement. So like, I'm not sure if dollar yen hit it or not. Let's check dollar yen. Um, dollar yen. Now the move has been made on dollar yen. So, but dollar yen was a double top we're waiting for. That may be a good example. If you guys don't mind us being all over the place. But what else is new in the live room? Welcome to the live room. If you're new, we are all over the place all of the time. So for example, so here's our chart. So let me just clear off all this stuff. Yeah, Parabolic SAR. Zach, blame Zach. Zach here today? Zach's fault. Oh, he is. Yeah, I was gonna say not you, Zach. Yeah, it was Zach with a K. Yeah. Doing some parabolic SAR work. Remove EMA. Remove. Like we're exercising demons here from my chart, right? Moving average. Be gone. Oh, that'd be another one. I'm going to tell my buddy. Any of you guys know Michael Lamott? Mara Wealth? Crazy guy on Instagram and Twitter. Yeah. I feel like he makes these crazy videos, man, which not my personal cup of tea, but I like them. They're entertaining. I feel like that's something he would do, where he would have like are you tired of having all this junk on your chart? And he has like the little, he's maybe not dressed up like a priest or whatever like that. That could be offensive these days, but he just starts taking away stuff. Moving average, be gone. MACD, be gone. And then he gets down to like naked price trading. Then he accidentally like takes away his clothes by accident, like as a but they don't show anything, right? The camera's panned perfectly, and he's like, oops, too much. That'd be funny. Or disturbingly awkward, one of the two. As far as that, there's a fine line, but yeah. So here's an example of a this double top. I believe came to a 3D2. I'm no longer interested in this double top because we hit the level that we predicted. If you guys remember, this was our first target zone, right above this pregnant pause. But I believe we also hit a 3D2. No, we didn't. Okay. No, we did. Yeah. So once we hit the 3D2, I'm no longer interested in double bottoms or double tops. Being a professional. I'll tell you, the best thing I enjoyed with Trade Empowered, and I know many of you guys didn't even know about us in those days, we had so much fun doing promo videos for events. Like, I was talking to Jason the other day, Jason Stapleton. I think one of the reasons Jason Stapleton decided to do events was just so we can make videos. Like, he was big into film, obviously, that's why he's out in Hollywood now, but we put more work into planning for like the promo with the like the epic fight scene we did. We did more planning into that than the actual trading event. Like we'd spend like a month planning the video sequence, and then they'd be like the day before, like, hey, what are we gonna talk about, man? But it's fun doing that type of stuff. Max says, got it. How come? How come what? Is this to the not planning events, or this back to the 3D2? I'll go back to the upper and the dollar yen back on for you guys. How come the 3D2? Well, just because we just talked about it. Why the 3D2, guys? Why is that level important for me? Yep, it was the fib failure signal. So again, I did enough work on that strategy, even though it didn't pan out for me. I did enough work on that strategy to notice the importance of that 3D2. And it was a filter that I was able to use to really differentiate trend continuation versus counter trend trading opportunities. Yep. Once we get to that 3D2, that's going to be an established, that's a pullback in a strong trend. So it became a filter for me. You see, look how deliciously it hit that level. So again, it would be interesting for you guys that are doing. It'd be interesting to go back and look at that fib failure strategy. It's nothing but it's basically taking advantage of a strong trend because it's a shallow retracement. But it'd be interesting to look at it with new knowledge in the market. But it's at the end of the day, it's no different. It's an aggressive pullback strategy. Let's put it like that. The key is, and the hard part for me is, it has to be trend following. So you have to be looking for the extension. You're not going to be able to get a good risk reward just looking for a pullback. It has to be an extension because it's such a shallow retracement. But the key is, right, the stronger the trend, should the retracement be deeper or shallower? It should be shallower. So that's kind of the key. That's kind of the key. By the way, speaking of which, just to excuse me, follow up on our conversation. You guys remember Tuesday? We're talking about me adding a rule for this next year when I can in December about missing the entry and re-entering instead of just needing to pass on the trade, right? Here's an example. This is one that I'm going to take a picture of and put in my notes. What would have been the result of doing that here? This results would have been a win, right? If you weren't here, we're talking about how the entry I was supposed to take. This was a missed trade for me. So it's my bad. It's an oopsie. It needs to go in my journal. Now, it was because life took over, but that's no excuse. But this was supposed to be a lower low, lower close entry for me. And I missed this entry, and what I was waiting for was a double top. And we had a good conversation about really I should be able to put a limit order back here at my original entry in case the market comes up and gets it. I just can't do it because it's not technically in my rules yet. And this would have been an example of, again, market came down here. We did retrace back up. I would have got filled on here unless this was a spike that happened very, very quickly. But most likely I would have been filled right here. And then would have been able to take advantage of this trade. Now, again, there are many examples of when this is going to happen and this is also going to go like this. Boom, right? So let's not over glorify it, but you want to track these examples and just keep notes on them when they happen. I don't, there's no reason not. And again, it's only if you were supposed to be in that trade to begin with. That's the key. It's not like you're saying, oh, I'm not supposed to enter on lower, low, lower close, but now I'm going to. No, it's only if you were supposed to be in a trade and you're like, crap, I missed it for whatever reason, and now the market's giving you a second chance. But it's key we note that, because again, some traders I can see traders going, it looks like it's moving in that direction. Now I'm going to change my entry. So it's only if you miss it. So let's go back down to let's go to Eurodollar. Let's go back down to the 15er. 15, stupid M. It's going to be like this for a year. So 15er, we're not really getting too much action. Now you can see if you're watching this on a 15-minute chart, as we come up into that previous level of structure, let's kind of erase the junk here, right? You're going to have multiple higher high, higher closes. Now you can say that this would have been, or lower low, lower closes. You can say that this is going to be your entry right here. Most likely, you probably would have had your entry in this area right here. This was your first lower low, lower close. So it would have been around almost the same area, so not too much of a difference. But I wonder, what the range bar chart's gonna look like. That is gonna irritate me forever. So let's just see if there would have been a way to get involved here on the range bar chart. So this is what we're looking at right here. This is our kind of dip retracement. This was an area we were looking at yesterday. We're actually looking for a long opportunity here. If you guys remember, we're looking for the market to kind of break this double top here and give it a chance to get long. This was before, remember, at this point, we broke that initial level of structure. We didn't break that lower level of structure. So we still had a little bit of a bullish bias. We did not double top held. Then we came back down. We took out our lows and we took out the other lows. Right? And that's what changed our mindset. We came up here. This would have been my entry right here on the range bar chart. But Akil, price went higher than it. This would have been my entry. Let me just double check that to make sure we went overbought. Oh, we didn't go overbought. I take that back. Okay. This wouldn't have been my entry. We came to 79.9 and not 80. All right. So that wouldn't have been my entry right there. Yeah, I don't think there would have been one. I want to see that overbought condition. Yeah, we never had overboughtness. Yeah, so no entry on the range bar either. Interesting. Now, something to look for. If we refuse, we talked about resetting the process, creating a lower low, lower close here, and looking for the next pullback. Let's say we turn around right here, and we take out these highs. What does this then become? Head and shoulders, right? You guys see it? This becomes a different pattern entirely. This becomes a head and shoulders bottom. And again, what's key here is we're taking out these highs. This is the key level. Just like it was yesterday, this is the key level. You want to see this violation. If we can take out these highs, that changes really the story of the market. At that point, I think we can look for the start of a potential reversal. Make sense, guys? Max says, wow, you guys are good. So, going back over that conversation earlier about the guy who was kind of saying, technicals don't work and blah, blah, blah. I think he just doesn't have a understanding. Just like I don't have an understanding of the full process that the fundies trade, right? But I think for people that don't use technical analysis, I think they assume that are a silly little technical analyst, right? We dress up in black robes and light candles, and then we see something on a chart, and then once we see it on a chart, we make a prediction. We're like, we're going to go long. Where in reality, we're making adjustments, right? Are we not? It's one of the things that caught me that he said is like, well, you just can't predict and predict and predict. And I always like to say we're predictive in our analysis, we're reactive in our execution, right? We're predicting, but then we're waiting. Right? We're not just predicting and saying, oh, I'm going to buy it right here because of a head and shoulders. No, we're coming into the market and we're saying, okay, this looks like it could be a head and shoulders. If we violate that yellow line, then we have confirmation of that head and shoulders. Then I'm going to look for this and that to get involved, right? We're looking for that confirmation because at the same point, we at this point, we know exactly what we're going to do, whether the market goes up or down. And we're not really making a prediction, right? Cody's not looking at this saying, hey, I want to buy, I want to sell. At this moment, perhaps, he's saying, hey, if we break that line to the upside, that's a valid head and shoulders. I know from historical testing that when I see this very specific pattern, right, history has told me that this is more likely to happen than that. But if price action breaks that bottom line and gives us a lower low, lower close to the downside, then, right, history has told me that that's confirmation of a bearish trend. I should look for this, right? We're not bullish or bearish right now. We just have ideas and we're ready to act. We're ready to react no matter what happens in the market. I think people that are unfamiliar with technical analysis, they look at this and you're like, okay, so head and shoulders, so I should buy it right now? No. You shouldn't buy it right now. You should have a theory, an idea. You should prepare. But then you wait for the market to confirm that idea. What I think is silly, here's what I think is dumb, right? And I don't mean to bash the fundamental traders. I think it's dumb to predict a news event. I'd much rather look at a chart and wait for the charts to tell me a story than be like, hey, we got unemployment claims coming out in about 28 minutes. I think the number is going to be this, so I'm going to buy it right now. That's a blind prediction in my opinion. At least we have something to base off of. right? People need to understand that the markets, right? The price chart, excuse me, is a visual representation of everyone involved, right? The markets react based on how people react. I'm not comfortable in advance putting money at risk based on trying to predict how people will react to a number. I would more likely, I do enjoy more looking at a chart, because at least like historical price action, and people get a big, well, what does historical price action have to do with current price action? Historical price action tells you how people have reacted in the past. Right? Why is a 200 EMA important? Can anyone tell me the technical principles of why a 200 EMA is important? It's not important at all. But people think it's important. And if people think it's important, and if people consistently react a certain way every time a 200 EMA has been hit, and if you look back and you historically see that every time this 200 EMA is hit, people react a certain way, I think it's fair to make the prediction that the next time this 200 EMA is hit, people will react a certain way. And I'm not an EMA person, but that's how it works. It's psychological. But it's psychology that could be proven. We don't know how it's going to react, but we can look in the past, and if you have tested, if you looked at just random numbers, if you looked at 1,000 situations where price hits the 200 EMA, and if price has reacted a certain way 80% of the time, is it not fair to assume that if price action hits this EMA in the future, there is a better chance that it's going to react this way versus that way? Is that not fair? I think that's a logical assumption. Right? For you guys that who drives to work every day? Anybody? Or you catch the train? Anybody? What do? You drive? You catch a train? What do you guys do? You drive to work, right? When you put your key in the car and you turn it, do you assume it's going to start? Why do you assume it's going to start? What has told you that's going to start? History, because it started 99% of the time you did it before. Is it going to start every time? No, right? Public transportation, right? Why do you go to the train station at a certain time? Because you assume the train or the bus, whatever you're catching, is going to be there at that time. Why? Because it is scheduled to be there at that time, and historically it has gotten there at that time, blah, 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 times in the past. Are there days where it could be late? Yeah. I was gonna say, I remember in London, I kept hearing stories, oh, train's late today, someone else got pushed into the tracks. I'm like, what's wrong with you guys? So not every time, but more times than not, it's going to be on time-ish, unless you're in London. So I think that's the whole misunderstanding, is that people assume that when you make a prediction, we're assuming we're going to be right, as like every time. That's not the case. We're just playing the probabilities. We are no different than a casino, right? Why do casinos make money? Because they have the edge in every game, which means they're more likely to win than you. And they don't win all the time. But over time, they're consistently putting themselves in a position where they are more likely to take your money versus you take money from them. And that's what we're doing in trading. We're looking at historical probabilities. We're looking at odds. We're looking at very specific pattern formations, price action pattern formations, which is based off human activity. And we're saying to ourselves, historically, when I see this or when price reacts like this is the most likely outcome. And when you add that with proper risk management, So when you put yourself in a position where, and again, you don't have to win more than you lose in trading, but just for this example, if you put yourself in a position where not only do you win more than you lose, but your risk management is set up so that when you win more than what you give back when you lose. The only question you should be asking yourself is how many times can I find this damn pattern? Just give it to me more. Because the odds are in my favor. Just give it to me more. I said I wasn't going to get into a fundamental rant today. See what you guys did to me? See Zach with an H? I blame you now. No more Zachs in the room. All right. So two predictions here. If we rally up here, potential head and shoulders is going to offer a bullish opportunity. Obviously, if we break these lows, there's still some more room to the downside for that bearish opportunity. Any questions on the euro dollar? Take that, funny mental traders. And I have nothing against fundamental traders either. All right, let's go to pound dollar next. Kind of just going through in the order today. Right, we got some BOE movement today again. Carney is speaking. I'm not sure if he's still speaking right now. It's been a little bit. But we can refresh our analysis on this pair. Max says there was a fundamental trader at the Trader Vault, and he basically said, don't do it unless you have years and years of experience and a lot of resources in a team. That's what I was always told. And that's speaking to, like, here's the truth, man. I don't want to say this. No, there are. I was going to say it's hard to find a retail fundamental trader. I was going to say, like, there's no retail fundamental traders that are successful, but that's what people say about retail trading in general. So I don't want to put it that far, but it's unless you're very specific in what you do. Max said that's what he said. I would say this. Yeah, I think you can be successful as a retail fundamental trader. By retail, basically, I mean you're trading by yourself, like what we're doing. But I would say this. I think it's very hard. The way I would do it is you have to be very specific, right? So, for example, you guys know Tony on the platform? Everyone knows Tony, right? I think he opened up his portfolio a little bit, but when Tony first started trading for years, he only traded a single pair. Did you guys know that? The pound yen was the only pair that he traded. Now, I think he either added or is looking at adding two more, but he only traded one pair. Guess how good he was with that pair? He's real good, yeah. He knew it like the back of his hand, right? Typically, I'm very stubborn in just my ideas in the market. But when Tony would say something about that pair, I believe him. He'd be like, hey, guys, we're near a 50% retracement. This pair loves that 50% retracement. Usually I'm like, well, how do you? And I'm like, well, wait a minute. This is the only pair he looks at. And each pair has its own different personality. I'm going to take his word for it. Start paying attention to this 50% retracement more. So I think if you're going to be a retail trader and you focus on like a single currency or a single currency grouping. So like right now with all the trade war talk going on, let's say I'm just going to focus on dollar and yen news. I think it's doable because now you have two things to focus on, and the less you have to focus on, the easier it is, right? So I do think it's doable like that. If you're focusing on, or if you're trading, like maybe you're trading the dollar index, that's iffy. But that would be an example. So I do think you can be successful doing that if you don't overload yourself. You trade a very small or very specific grouping. So like if I were trading, if we're going over to kind of the whole trade talk situation, I would trade the dollar yen, the Aussie dollar, and the Aussie yen, right? Because all of those are kind of affected, right? The Aussie's affected by what's happening with the trade war. So I have kind of a select thing I have to pay attention to, and I can probably trade about 3 or 4 pairs off of that. I think that's doable. I think for someone to have a very large portfolio and try to do everything, I think either you have to be very, very, very smart and organized, or like, was it Max who said that? It was, like Max said, and this is what I always heard as well, you need a team. You need a team of individuals. We need to have a team where it's like what we have here in the live room, and it's like we're in groups of 4, and each group is in charge of their specific country, right? And then what we would do is we would have meetings each week where we'd come in, we'd present our ideas, and then we'd kind of group think about how those ideas may play out in the market. But you need to be an expert. And I just think it's very hard. Maybe it's because of my limited brain capacity. I think it's very hard to know everything that's happening at once. I don't know if you guys have ever tried. I randomly switched on CNBC the other day, where it was what was it? It was trade war, it was Brexit, and it was like 3 other things. An oil tanker blew up. Like 3 things happening at once, and like I couldn't remember anything. It was information overload. Now, again, I have a very limited brain capacity. But yeah, I've always heard the same thing from kind of fundamental traders. You need a team. It needs to be organized. But I certainly think it's doable on a if you're going to be very select in what you're doing. And I'll tell you what, even the fundamental traders, they use technicals. You guys realize that? They use technicals. The technicals are just secondary. So we may be looking at a chart first, and then looking like, hey, this kind of lines up, this chart pattern lines up with what's going on out in the news for a home run trade. They're developing their IMP, essentially, identify, predict. That's based off fundamentals, and then they're looking for the chart pattern for entry, right? So they may have a bullish bias on the pound, and they're looking at this and saying, okay, well, I know that if we take out these highs, right, that's gonna fit my bias. Let's get that buy stop right here. Or something where it's like, if the pound comes down to this level, right, this is certainly a cheap enough spot to buy it up. I have that longer term bullish bias. I'm gonna buy it up at that level. So yeah, certainly understandable. It's tough. All right, speaking of the pound, right? So the pound is one that, pound dollar, we've been consolidating like most pound pairs have been doing. At this point, we can break higher and lower, or lower. Of course, that doesn't help you out, does it? We need to take out these highs in order to go higher. If we do, we can come to these next highs, which are about 131.63s. I think a move lower would give us a bigger move, because we're sitting, and I should write down that we're talking about the pound dollar, excuse me. We're sitting at a pretty decent level of support. Would you guys agree? We're testing this level for the second time. If we look left, we got a nice little shelf right here. So if we were to break lower, right, we do have this level right on top of it. This is going to be a level we can look at in lower time frames. That's actually pretty close. But this area right here, about 126 flat, if you want to narrow this down some, this is a level I would have my eye on. 126 flat, this area. And again, this is 127 is tricky. But this would be the first level to retest in here. Now it also looks like we may be forming, right? If we kind of look at what's happening here, we may be forming what? We may
Connection lost.
Did my internet just go out again? Hold on. 1 2, mic check, 1 2 1 2. Thank you. Yeah. Apologies, guys. So, we've been having some internet issues for a little bit. They're doing work on some wires at the top of my community. And I don't know when that's going to be done, but I'm guessing that they're randomly turning stuff off and on, like within a few minutes. And for people that stream live, like myself, that is a problem. For people that don't, they probably don't even notice it. So I apologize for that, and hopefully that gets done sooner than later. Yeah, very annoying. And that's what I was trying to explain to the lady the other day. I'm like, they're like, oh yeah, it clicks off for a second. I'm like, well, that blows up everything for me. When you click off for a second. But whatever, people stink. So I apologize, but yeah, this could be a potential descending triangle. This could be a potential descending triangle, which would give us a sign of a breakout to the downside here. So let's go down to the 4 hour. And again, make sure you guys are seeing the screen and everything correctly. The 4 hour, yep. Now the 4 hour things get a little sloppy, right? Because we've got different levels of structure just creeping all under here. So probably not going to be a tradable opportunity, unfortunately, to the downside, just because as soon as we break, we're going to go right into another level of kind of previous structure support. Now, something we can look for is we can look for a hold at these lows. We can look for buying opportunities here. Obviously, we probably want to make sure there's short-term buying opportunities, but we could look for buying opportunities in the market as we come down to retest previous structure lows. So we kind of look at what price is doing right now. We're coming back into this kind of junky phase. Perhaps if you go down to, say, a range bar chart, maybe there's a short-term buying opportunity where you can get involved from like a 128.10 to like a 128.30. Again, not a lot of room here on the chart. But I just think it's gonna be difficult to sell, and even buying it's not gonna look like much. So bigger picture, decent prediction here on the pound dollar. I just don't think there's any way to kind of, unless I don't see anything right now that gives us a way to execute it, unfortunately, unless you're perhaps trading off of the daily. So, questions on pound dollar? I know Latch wanted to take a look at euro pound next. We can head over there. You said lower time frame, potential, you said what, potential shorts, Latch? Could it potentially put in the high and tight flag? Most likely not, no, because we already have a lower high here. Now we could, if we could reset kind of that process and retrace up here, right? But as of right now, it doesn't look like it. I would be more interested in upside movement versus downside movement, though, just going down to the lower time frames and not seeing too much around there. All right, let's go to euro pound, the molasses pair. Euro pound on the daily, right? Saw this big move, this big thunderous move down, as the euro pound does from time to time. Again, I think it moves like junk for the majority of the time, and you get these big moves, and then it kind of goes back to this. And currently we're holding previous structure lows, right? We're waiting for kind of a breakout of this wedge. There was a little bit of room to go lower down to about 180, basically, or 85 flats. And now we're kind of consolidating here. So we're going to be in somewhat of a range. Let's see if that gets cleared up as we go down to the lower time frames here. 4 hour chart. If you're a trend line trader, you can make the case like this for a break and close below that trend line. This is a dumb pair. If you're a trend line trader, you can make the case for a break and close below this trend line. Just understand that we have not broken the horizontal support level. I think we're gonna need to see a break of that horizontal, that purple line, before you can make any type of case at getting short here. Getting long, unfortunately, we're probably gonna need to see a break of these highs right up there. So we got some movement happening here. I just don't think that I don't think there's any way we can make a solid prediction on which way price is likely to go on this pair. Let's just go down to the 15 to 5, yeah. right, let's go over to let's go to Euro Yen next. Euro Yen back up to the daily. That's where we'd like to start if you guys haven't noticed that yet. Euro Yen, the consolidation continues, guys. How much do you love this? The consolidation continues. We did spike and kind of breached the lows, and then we came right back up into that range, right? Now remember, Euro Yen looking left, trading at previous structure resistance. We have not violated this level. And right now we're kind of stuck like Chuck, as Todd Brown would say. We're just kind of going sideways here. Here's your high and tight flag, max. Not at an ideal location, because you'd want to see that above previous structure highs. And there's room. If we break higher, there's room to travel to 122 evens. 40, I mean, that's 60 pips. It's not much on the daily, but there, you can maybe find some room on a lower time frame, perhaps. And that's one of the reasons what I was looking for was originally was a 2618, where before we pushed up into this level, right, was looking for, after this green candle, was looking for basically looking for what we did right here. Problem was we just did it late, and we did it way too big as far as that higher high, higher close goes. But I was looking to position myself at the lows because this would have given me the biggest opportunity, not only to kind of have a stop loss below this area. I wonder where that stop loss actually would have been at. Underneath the even handle, I think it had to be, right? Not only to give myself an opportunity to trade like this, but then trade for that bigger breakout. But unfortunately, this ended up being a pair that you watch for you watch for a week, and then it doesn't necessarily give you what you want to see. But that's trading for you. But this is an ideal candle right here, guys. This is what I like to see when we have test of support resistance. You see how this red candle, I'll draw an arrow there. You see how that red candle probes that low and then closes above it? That's what I like to see for aggressive entries. Well, the higher high, higher close afterwards. But that's a good sign. It means that we've actually tested the extremes, and it shows me that there is interest down here. Now, the problem with entry after that is, look how big this green candle is, right? If you're kind of predicting a risk reward like this, and you need a higher high, higher close to enter, your higher high, higher close is going to be right there. Is this a suitable risk reward for a trade? No. But if you're someone that is looking at this and you're saying to yourself, Akil, I see this way too much. I keep looking for opportunities. I'm getting more aggressive with my entry. I require a higher high, higher close. But every time we get a higher high, higher close, it's too far away. There are two things you can do. One, we can go down to the lower time frames, of course. This is where if you give yourself a three time frame combination, like a higher time frame, a trading time frame, and a lower time frame, this is where going down to the lower time frame may have given you a reason for entry. However, you also have to understand that sometimes going down to a lower time frame may also give you a violation of structure. So let's take a look at that first, and then we'll go to the second reason, or the second way. So here's our 60-minute. This is the lower time frame. Now, the problem with the 60 is what? We have a nice higher high, higher close right here. That candle, but we violated our structure. So unless you have a rule that says I just ignore that, you're still out of luck. Darn it. Dag nabbit. Now, there is a way, and we talked about this in the foundation too. This is a more aggressive approach. You see this, let's just go back to the. I apologize for bouncing around charts, but again, I had some data issues on Ninja a couple weeks ago, so bigger picture stuff. I'm typically looking at the trading view charts. Or let's go to trading view. Let's do a little replay action. So you see this replay. You see price action come down to here, right? This is where we've tested our previous level of structure. Let me know if you guys are seeing this. So something you can do is you can take an aggressive approach, and you can say, I'm going to put a buy stop above the highs. Ooh, that's not typing. You can put a buy stop above the highs. Which means if price works in this direction, you'll get filled as it's going up. Does that make sense? If price works in this direction, you'll get filled as we're going higher. Now, again, you got to still measure out your risk reward and see, well, does this area work for me, right? And I hate how long this risk reward is, but we're below 122s. Or excuse me, below 120s. And you're looking at that and you're saying, you know what? Ah, man. Well, I guess just, yeah. So you just get a 1-to-1 if you're here. But if you didn't, then you may have to wait. Fortunately, the next candle is that. So what can we do for our buy stop? Yeah. We now put it below, or excuse me, above this current candle. And then once again, we just decide to wait, see what happens. Now, boom, right? Instead of waiting to get filled at a higher high, higher close here, you're filled as this green candle is forming. Now, like anything in trading, right, before you guys get too excited, there's a gift and a curse. This is a much more aggressive way of entering. Right? Which means you're going to be involved in, you're going to catch more winners, but you're also going to catch more what? More losers, right? So imagine a reverse scenario where you're looking, imagine a reverse scenario where you're looking right here. Give me 1 second. Imagine on reverse scenarios where you're looking right here, excuse me, and you're saying, you know what, I want to get short here, guys. I'm going to put a sell stop right below these lows. In this scenario, I'm just picking this. Probably wouldn't actually be a sell for you. But this scenario, what happened there? You see how it spiked down? So this one actually traveled below. It would have filled you. And then it would have ran off in the opposite direction. On the other hand, if you were waiting for a lower low, lower close, right? Ignore this red candle being the lower low, low close. If you're looking for a lower low, lower close beyond this candle for confirmation, would you have ever been involved in the trade? No, right? And that's kind of the gift and the curse of the more aggressive you are, the more winners and losers you're going to take. The more conservative you are, the more winners and losers you're going to miss. So it's all about finding the balance. It's not a problem to take more losers if you're involving yourself in enough winners to cover for those losers. It's not a problem to take less winners if what you're avoiding in losers makes it more profitable. And personality as well. Personality as well. That is key. You need to be if you need to be more aggressive. But it's a good example of taking advantage of those moves more aggressively, and that's something I'm leaning towards a lot. That is probably going to be the next adjustment in my trading as I become more just more aggressive with entry techniques. I leave a lot of trades on the table. I make a lot of good predictions. I leave a lot of good trades on the table simply because I'm still somewhat conservative in my entries. And it may not seem conservative to you guys, right? I'm not necessarily waiting for double tops and all that stuff, but there's a lot of predictions that I make, and it's just like I just can't be involved. So a more aggressive way of getting involved would be ideal. Max, I can tell from your rants. Yeah, there is, yeah, and that's part of trading. I mean, I started very conservatively. I needed a double top at structure with RSI diversions and RSI overbought for every single trade I took. And then as you get more experience in the market, you get a better intuition. You become just better at your analysis, and you can afford to be a little bit more aggressive because you're taking typically a higher quality of trade or making a higher quality prediction. Gab Mob. Putting ideas on her radar. Lat says Latch is doing that right now, going through review videos, writing down all the predictions that gave me no entry, winner or loser. Yeah, that's why it's a good tool. I think we did it yesterday or the day before, where we just talk about scrolling through the market and just looking for opportunities and asking yourself, how could I have gotten involved? It's perfect practice for you guys. All right. Any questions on Euro Yen? So we're stuck like Chuck in the middle of no man's land right now at the Euro Yen. So we need to wait for a break to the downside or the upside, in my opinion. Any questions on Euro Yen before we take our first break? Good first part of our session. Euro dollar rant on fib dollar, a fib failure strategy, pound dollar, euro pound, Euro Yen rant on aggressive entries. All right. Let's put 13 minutes on the clock. Do we see any movement off of unemployment claims? I don't think so. Put 13 minutes on the clock. And I will... All right, gang. Welcome back to the Trading Coach Podcast. Welcome back to the live room. Dealing with some issues from the Trading Coach Podcast. That's why it's on my mind. But we're in hour 2 right now. So far, we spoke about euro dollar. Did a rant on the fib failure strategy. Took a look at the pound dollar, the euro pound, and the euro yen. Did a little bit of a lesson about aggressive entries as well. And let's try this again. Had to double tap the mic. Is there sound now? Maybe that's going to be a new habit. Just got to double tap the mic every time. Okay, welcome back. All right. Let's continue along our path. So far, we've done euro dollar. I did a rant on the fib failure strategy. We did the pound dollar. We did the euro pound. We did the euro yen. Talked a little bit about aggressive entries. There was a rant in there about technical, about fundamental analysis as well somewhere. But let's continue on. Let's head over to, probably going to skip past the pound yen. There's not too much happening here. Here's Gabby's cipher from yesterday, which came ever so close to completing. Actually, give me 1 second here, guys. Because speaking of ever so close to completing, I was looking for New Zealand dollar, which was ever so close and still hasn't completed yet. All right, so let's go to dollar yen. This is one we touched on briefly earlier when we were talking about kind of the fib failure strategy and just how deep a double top or double bottom needed to be for me based on some of the filters that I had. And so euro yen, we went from, I guess, bigger picture. I'm still looking for a head and shoulders breakout. But kind of like we spoke about with the euro dollar, I need to see a breakout first. And we haven't had that breakout of the horizontal level of resistance. So we still don't have confirmation of this bigger head and shoulders. Now, if you trade a horizontal, like a trend line, then you do. So it's going to be an example of just a different group of traders looking at different things depending on how they do their analysis. Something that I was looking for here this week was actually a selling opportunity, right? You'll see on the lower time frame when we get there, we had broken and closed below a level of structure. We came back up to retest, or actually we broke and closed below a level of structure right here. We came back up to retest this wick, looking for a selling opportunity. Now, for me, the move has already been made. We spoke about 2 target levels yesterday. One was right in here. Secondary ones were these lows. We've already come to this move, so I'm no longer interested in selling if we get a double top here. One, the move has already been made. 2, it violates that 3D2 level that we spoke about earlier. So you could still have a valid double top. You could still pair that with the RSI being overbought with bearish divergence. And you can still look to trade this. It's just not one for me personally. Going down to the hourly, I don't think we're going to see much there. Down to the 15-minute chart. And there's not too much on the lower time frames here. Maybe a pattern formation earlier today here in the 5. It's not one that's going to get you out your seat. Probably very, very, very small. But just from a pattern recognition standpoint, you had a nice Gartley here earlier in the day here on the 5-minute chart. Perhaps could have been used as an entry reason if you were looking to get short. X to A, A to B, B to C, and then a C to D right here at our 127, lining up for 886. Any questions on the dollar yen? All right, let's see what else offers a decent opportunity to talk about. There wasn't too much on my radar this morning. Oh, take care, Ale. Going back to work. Canada hasn't really moved much. This is another goofy one. Let's go to the Aussie dollar is still interesting. So Aussie dollar is still interesting. It just hasn't really done much. That's been kind of the theme of this week. We started off Tuesday with a bang. Tuesday I had about 1 million pairs on my radar. Unfortunately, we're just not seeing a lot of follow through from most of them. But Aussie dollar is one that I'm still looking for a bullish move here. Again, the most recent move is a higher high, higher close, not only above this level, but this level right here. I think we have a good amount of room to the upside. If we can push higher, we just haven't pushed higher yet. We just haven't broken out of this range that we're in. And you can see going down to the 4-hour chart, right? I was looking for a break to the upside. If anything, we keep getting breaks to the downside. Unfortunately, I don't have any reason to look to get bearish here, as we're still within kind of these zones right there. So I have no reason to look to get bearish, only bullish, and we just haven't we haven't really given us any reason to get bullish. Now, from a shorter term perspective, we can take a look at this kind of level right here. This is going to be very similar to the dollar yen situation, where we have the price action moving in this range, right? We break out of it, right? You see this little lower low, lower close right here, this red candle? Yep, we break out of it, and then we come back to retest those highs. So for a short-term shorting opportunity, you may be able to find something here. Again, for me, it's difficult to make a prediction that we're likely to go lower. I just don't see that. I see us already in this zone. I have no reason to predict that we're likely to either retest this zone or continue lower. But we could take a look at this on a lower time frame for you guys that may be looking that way. Is your sound fixed, Gabby? crystal clear. My voice box is hurting. Hey, give me one second, guys. I'm gonna grab a swig of water real quick. I'll be right back. There we go. That feels a lot better. By the way, euro dollar looks like we may not be completing that head and shoulders. Looks like we're taking a nosedive towards the lows here. So maybe gearing up for that short opportunity and not the long opportunity. All right, so going down to the 60-minute chart on Aussie dollar. Again, if you're looking to get short, here's your lower low, lower close. Right? Can you guys see it on your chart? Lower low, lower close. Perfect, 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 perfect. Again, I don't think there's any reason to get short, but this would have been your aggressive entry. And once again, just kind of following up on the conversation we had earlier, if you're looking for like a sell stop or something like that, a few choices, right? The most aggressive way would be to put it right underneath this candle, right? After we get these highs and probe these highs, but don't violate it. Or if you're doing it after a lower low, lower close, wait for that lower low, lower close, then put the sell stop underneath that. Targets I would look for if I were in this trade. This is going to be the first level of danger. Probably not going to get a good target out of that unless you entered really, really high up here. Second level would be a retest. Retest of the lows right inside here. Let's take a look at this on 15-minute chart. Now, 15-minute, you did have a higher high, higher close. So if you're going down to the 15-minute chart, would have invalidated your reason for entry up here. So probably wouldn't have been a way you can get involved. And I would guess we're going to see the same thing on the range bar chart. So looks like if anything under the hourly wouldn't have given you a reason to get involved either. And actually, range bar charts would have been valid here on the range bar charts. We do not have a higher high, higher close here on the range bar charts. Your lower low, lower close would have come right here. So as typical as of the range bar charts, this would have given you your best reason for entry. This also looks like a Fibonacci failure trade. Probably a little bit higher. You guys familiar with the Fibonacci failure? This would have been your first. Now here's the thing. So this, before getting the Fibonacci failure, this would have been your first strike right here, guys. This would have been a losing trade, unless you had stops above here. This would have been a losing trade, and you would have had to get right back into it with a winner. So here's a good example of if you're an aggressive kind of trend continuation trader, again, depending on how you're trading this, you would have had to be okay with taking a loss here and then reloading and trying to get a win here. But is anyone not familiar with the Fibonacci failure? This looks like a textbook one. We'll see in a second. Or Fibonacci, not failure, sorry. Fibonacci inversion, I'm sorry. Fibonacci inversion. I got failure in the mind. Sorry about that, Fibonacci inversion. So the Fibonacci inversion is a tricky little trick where the market tricks you into thinking it's going one way and it ends up going the other way, right? So you look at this from a pure technical perspective and we see, right, we have this series of swing high, swing low, outside return, new structure low, outside return, right, new structure low. We see a violation of this level. and we say bullish rotation, right? Yeah, bullish rotation. When we're in bullish rotation, probably not looking to get short. Fibonacci inversion is when the market basically tricks you, puts in an extra wave, tricks you into thinking that the trend is violated when it's really not. It's kind of like a short-term violation, and we get right back into it. And one of the things you do is you take your Fibonacci extension tool, invert it. So instead of going kind of left to right on your screen, you're going right to left. Swing low to swing high, and we're looking for that 1618 inversion as a level to start looking for your trading opportunities. And again, the idea is that the market kind of, just like how we talked about the butterfly the other day, kind of tricks traders into thinking we're going the opposite direction, and then we continue in the normal direction of the trend. Now again, in this situation, I don't have a bearish bias, but a good example of what a Fibonacci inversion trade looks like. And then the question that typically comes with that, well, Keel, how do I know if I'm being tricked or not? You don't. You never know. You don't know. Yeah, you don't know. All you can look to do is identify a strong trend and look for a brief retracement in that strong trend. You can see the desperation to talk about, yeah, I'm like, fib failure is on the mind. Like, why am I talking about fib failure? I forgot we had that conversation earlier. Yeah, you know afterwards. That's how you know. Afterwards. Hindsight. All right. Let's go to, just curious, euro dollar. Could it be a complex pullback? It could be. That's another one where we don't know until we know. Yeah, it could be fib inversion. Could be a complex pullback as well. Yep, and that'd be one of the ways of measuring kind of the. That's another way to do it, is where you have something like this, and then you use that Fibonacci inversion to measure, try to predict where that complex pullback is going to come to. So that's another way of doing it as well. Yep. All right, let us go to Aussie Canada. That's what's going on in Aussie Canada. Euro Aussie returning to smash the lows once again. Did we break and close? Nope. All right, let's take a look at Euro Aussie next. Euro Aussie 118. Cool, I'm learning stuff. Excellent. Excellent. So Euro Aussie, we've come back down to retest previous structure lows. We take a look at price action. I don't believe we violated it. Yep. And currently we're holding previous structure lows. So we're at a decision point. If we break and close below, you can make the case for a continuation lower. There's not a lot of meat left on the bone to go lower, only a few 20 pips or so. So in this situation, you're probably looking for more buying opportunities than selling opportunities when it comes to this pair. So heading over to the 60, the 1 hour chart, because that was the 4 hour, correct? Yep. If you're looking for a buying opportunity, let's see if you have anything down here. Well, could be setting up a potential double bottom. This may be clear on a 15, but looking at price action kind of slamming down here, coming back to retest, and then looking for an opportunity to trade it up. Let's see if the 15 gives us a clearer look at that. Not so much. This is where it may be worth heading to a range bar chart. Maybe even a higher time frame range bar chart, seeing if it gives you a clearer picture. And unfortunately, it does not. Unfortunately, it does not. let's see. Why do we not go to 80 range? 80R. Nope, that doesn't even really give us a clear picture either. Okay. So, I don't think there's a way to get involved here on the Euro Aussie, again, aside from waiting for a double bottom at that area. Now, the tough part here is if you are waiting for this double bottom, the tough part is going to be where to take targets at. Obviously, the top of your double bottom is going to be about right here at about 160.66. Right ahead of that, you have some inside structure about 160.73. And then after that level, you got some room up to about 61 evens. I think that's going to be the tough part, deciding where to put targets at. But you can make the, ooh, I don't want to move that too much. Sorry, guys. If we're doing a stop here, our ATR is 19. So 36, 26, 16, 17 is going to be a 1 ATR stop. If you do get an entry, let's say at market right here, that's probably going to take a retest of the top of the highs out of the equation, because that risk reward isn't going to match up. It's going to be slightly inverse. And I'll tell you what, even shooting for, again, a lot of it will depend on where this double bottom completes at. Yeah, you'll probably at least have to shoot for this inside level of structure. Any of you guys got this on your radar at all? Nope, nope, nope. Maybe. It's an opportunity. I wouldn't call it the greatest opportunity. A little bit hard with target projections, but it is a buying opportunity. All my targets are based on structure. Yep, based on structure. So I use reverse analysis. I use a technique I like to call, probably a little long-winded, but think like the other trader. So I look for places on where I think the market is most likely going to reverse. So if this were me in this situation, the first level that would be on my radar is this inside level of structure, right? So right about here. Now the problem with this is, right, this is right above the highs of a double top. So the question is it worth the extra risk of taking targets here when you have another not as dangerous point, but dangerous point there? And the answer is no, because this is about 3 pips apart. So if I were taking it in this situation, I'd aim for a retest of the highs. Obviously, it's not really going to give me any type of tradable opportunity. So it does vary on the situation. The dollar yen example, you can see that had much bigger targets. This one, we just don't have a clear path. There's no reason to believe that we're likely to continue up to retest these highs, at least with initial targets for me. So I'm not that aggressive to just take everything off of there. So for me, it's a decent situation. I think just the target taking options aren't the greatest. I used to, when I first started trading, I used to just do 3D2 every time. So I'd take a 3D2 retracement, and then that would be my targets. And then when I kind of found myself as a trader and I relied less on just like random Fibonacci's and more of price action, that's when that began to change. But first, it was always 382 and 618. When Jason Stapleton laid out his plan, it was very kind of military-like, just very, very consistent, very strict, which wasn't a bad thing. All right, let's take a look at pound Aussie real quick. I don't think there's anything here. This is... So here's another situation. This one may be a little bit more interesting. This is a decent looking setup. Again, the problem is going to be risk profile. So we look at pound Aussie here on what are we on here? On a daily chart. And we see that price is at a pretty interesting level, right? It doesn't, I mean, price has been doing absolutely blah for the last, like, what, month? But we finally come down into an area of kind of a pause, right? You guys remember our conversation yesterday? We have a big green candle here, right? What do we have before that big green candle? We actually have 1, 2, 3. We have 4 or 5 bearish candles or bullish candles in a row. We have high momentum, and we have a little bit of a pause, right? The calm before the storm, and then a big green candle. So this automatically shouts to me, right, on a lower time frame, this is probably going to stand out as some type of consolidation, right? Would you guys agree? Again, just knowing what a doji candle gives us. So I look at this, and I probably say this is an area where we could see some reactions because we saw a pause in the past. So we take that down to our 4-hour chart. And we can indeed see that, hey, there's a little bit of consolidation here, right? Price action came up. We had a little consolidation in here. And then we came up further, and we had some consolidation in here, right? Not a bad level to look for buying opportunities. Now, the problem that exists is that we're slowly stair-stepping down. So if you're a structured trader, right, this was our previous structure low, which means if we're thinking buying opportunities, this is probably an area, again, if you're a structure-based trader, this is probably an area that you should pay attention to, which we're basically trading right there. So it's going to be very hard to take any type of targets there. However, right, we keep going down to a lower time frame. Let's go down to a 60-minute chart here. We got some pretty cool candlesticks forming. Pretty cool being a technical term, of course. And you'll see when I get one of these VS1s or VS1 level, right? So we have a nice bearish candle that's formed. Then we start to see a little tail at the end, right? We know that the tail at the end gives us a good kind of idea of selling pressure, right? Then we see another, this is a beautiful candle, this red one. With the long tail at the end, right? We probe, we find more buying pressure, right? We find more buying pressure at this area. So in a reversal situation, what would we be looking for after this type of candlestick combination? Higher high, higher close, right? So you can make the case if we get a higher high, higher close, decent sign for a reversal. Of course, we talked about earlier, if you're going to be aggressive, you can also just do a buy stop above that. But once again, the problem lies is that our most dangerous level of structure is right here. And essentially that higher high, higher close would have come right to that level. With that being said, if you want to be more aggressive, this is a level you can look for. Now, I still don't think it's going to give you an opportunity, mainly because, right, the good part about this long wick is that it gives you a good idea of the buying pressure. What's the bad part about it? Yeah, stops need to be below it. So if you're using an ATR-based stop, right, our ATR is 34 here, right? So we're looking at about 15s for our stop loss. Ready for it? If you get a higher high, higher close right here, just right above it, or if you use a buy stop, yeah, you're going to get something like this, where you're already at your obstacle, let's say. But even if you're going higher, let's say for kind of the extreme, the aggressive targets, it's still not putting you in a good situation. And for you guys that are new, this is going to be a lot of your time in the markets. You're going to see stuff where it's like, man, that looks good, but then the rest of it, right? We look at three things, right? Entry, stops, and targets. You're going to see a lot of situations where entries or the opportunity looks good, but then like the stops are too far or the targets are too close. Or you'll have a good situation that has good stops and targets, but then you won't have your entry. And unfortunately, that's trading. We're waiting for kind of the sun, the stars, and the moon to all kind of, or the planets and the moon to all kind of line up. And typically you kind of get one of the three or two of the three, and very rarely do you get three of the three. So I like the story that Price is giving me here. I like this story a lot. I just don't like where it's happening at. I think this would be great if this didn't exist. If this were our previous structure lows, kind of right here, I guess it still wouldn't give us a good risk reward, but it'd be a much better situation, unfortunately. Now, it doesn't mean it's all said and done. You can look at this from a lower time frame perspective. You can go down to range bar charts. You can go down to 15-minute charts and go through kind of your entry process of what are other ways I can get involved. And you can take a look, and maybe there are ways, maybe there aren't, but head and shoulders, perhaps. I still don't think it's going to give you enough room, but perhaps if you get you kind of have a head and shoulders type deal forming here. I just think it's going to be difficult. For you guys that are new, are you starting to see how boring trading is? How little trading opportunities there actually are? But when you get that right one, and you guys have all been there, when you get the one that lines up and you nail it, man, there's not a better feeling, is there? I mean, not that we're emotionally invested in our trades or anything, but when you get one and you nail it, man, it's a better feeling. That's one of the reasons, and I am fully comfortable admitting this, right? One of the reasons that I like price action trading more than pattern trading is simply because of the ego. I like it because of the ego, right? I know that we should value profits over ego, but it needs to be said. It needs to be admitted, right? I'm not a robot. I'm a person. And I don't care. You don't have to be narcissistic to think that your ego needs to be stroked. Everyone's ego needs to be stroked. Who makes the best bosses? The ones that come around and say, "Hey, you know what, Max? You did a good job on that project." You're like, "Yeah, I feel a little good about myself," right? Kids love it. Like, "Hey, man, you did a great job brushing your teeth last night." "Ooh, thanks, Dad," right? We all need it. We all need it. Now, some people maybe need it all the time, and that's a problem. Or some people only want that, but can't take the other side of it, where it's like, "Hey, Nehemiah, you got to get your act together." Right? We need both sides of it. But pattern trading for me had gotten boring. It was, and trading is boring, but pattern trading, I didn't get any personal fulfillment out of it. Aside from the profits, which is great, don't get me wrong. But it was kind of like, it was so black and white. It was so black and white. And it was so strategic, where it was it was really no different for me than an automated strategy. Right? Where I traded every single pattern formation, didn't matter what the market was doing. There was no analysis. It was simply find the X leg, X to A to B, B to C, C to D, right? It was just that. No other analysis, right? My opinion didn't matter in the market. And again, it doesn't necessarily need to, but something that made me fall in love with price action trading was I felt like I was doing the work. I felt like I was doing the work. I felt like I was actually involved, and kind of like I was, I don't know. I felt fulfilled. Yeah, last said I want that responsibility with my trading, win or loss. Couldn't take any responsibility with patterns, and results were meh, so they're gone. Yeah, responsibility. That was I know there's old. I always tell you I used to trade this old trend continuation strategy. The one I was talking about the other day with Zach with a K, where I used a parabolic SAR, and we kind of I couldn't consistently do it because I started sabotaging myself and taking targets early instead of letting those 600 pip winners ride. And one of the reasons was that, again, it was tough psychologically, but it was belief. Like I was following someone else's strategy. Someone else told me to sell it every time this green arrow printed on your screen, and buy it every time this green arrow printed on your screen, sell it every time this red arrow printed on your screen. And there was no fulfillment. It was just like, do it every time. And I didn't trust it. It was hard for me to take losses because I'm like, well, I only took a loss because someone else's signal told me to do that. I like being responsible. I like getting the credit. I like getting the blame. I'm comfortable. Maybe I don't even like it. I'm comfortable doing that. I'm not comfortable kind of going off of, that's why I never did any signal services. I'm not comfortable off of losing money off of someone else's idea. I think it's a control thing too. But yeah, price action trading gives you kind of that fulfillment of your ego. Like, man, like you did all this work and you've been through 15 different trades, or you did all the work the right way and it didn't pan out. You never got your entries, and then you got that one. It's like, man, I earned it. It's like being in a hard fought sporting event. I watched the game last night. It was a women's soccer game at my school, and it was two of the top teams in the country, and they were slugging it out, man. Double overtime, and then finally it was senior night too. Finally, double overtime, and the other team controlled the game, and I don't know how we didn't lose, but we're just hanging in there, being gritty enough to hang in there. And then double overtime on senior night, one of the two seniors on the team scores the winning goal, and the team mobs the field and everything. We're celebrating. The other team they had a lot of lip too, so I'm glad they lost. To shut them up. But it was I talked to their 3 track and field players that also play soccer, and I texted one after the game. I said, hey man, good win. And she's like, and this is one that's usually like, she's completely neutral. She's your Tom Brady quarterback, right? You don't ever say anything, kind of Patriot style, where she's like, yeah, win's a win. Yep, good game, And this was the first time she's like, this one felt good. It's like they earned it, man. They fought hard. They earned it. There's something about that. Gabriel says, you need to be trading according to your level. I know I do funky stuff. If I don't get to do funky stuff, I'd be bored with trading, just like how I treat my men. Oh, whoa. Where are we going now? I'm afraid to keep reading. I love trading because I'm challenged beyond belief. Nehemiah says, I like control. Are we talking about trading or relationships now? Trading, okay. Gabby says, where you always get involved in the market, and the market's just simply flatness, always heavy battling, same thing. You go, yeah. Both are a puzzle. You women are a puzzle. Men are simple, man. I'm talking about men are simple. Just food, give us food, and that's half the battle's done, cured with food. You can women out there, look, you ever get in trouble, look, anything, if you want to figure out a man, just give us food, and that's half the battle. If it's an argument, give us food. We probably we forget what we're arguing about anyway. Give us food. If we're injured, give us food. If you want us to buy you something, give us food. You're welcome. The man code is easy to crack. FOOD. Now the woman code, man, I don't even pretend to know that. You guys got memories like elephants. And then of course, if I tell a woman that she's got a memory like an elephant, she's saying, "Oh, I'm big like an elephant." No. I was saying your memory is good. You called me. He called you big? He called you an elephant? No, I didn't call you an elephant. I said you have a memory like an elephant. It was a compliment. Whatever. Forget about it. I'm sorry. You guys are complicated. Gabby. I see Div Deep in here. Debs. Tobias. I actually found I heard I'm not sure how real it was, but I remember I heard something years ago where it talked about like the the normal attention span for most men, and how we respond much better to numbers in compared to women. Like our attention span is very, very, very short when it comes. I think it started off by saying women are more descriptive. So like in a game of charades, and I don't know how true this is. Like a game of charades, a woman is more likely to give better clues because they pay attention to the details. They're a lot more descriptive in something instead of like a man, right? So like if we're playing charades, and forgot charades is a game where you have to act out something, or you have to give, let's say another game where you have to give clues without saying what it is. I think it said like most like women are better at doing that because they just remember more. Like I was trying to give you an example of that video game scenario earlier, and I was just like, yeah, the game where the guy ran out and did this. And it was like men are more responsive to numbers. And there was like an experiment they did where it was like, they said, if you want to, I guess the conclusion was, if you want to keep your man's attention, you have to throw like a number into the conversation like every minute. So like if and you guys know, many of you guys have been there where you guys are telling us about your day and then that glossy look goes over our face, right? And that glossy look goes over your face and we're thinking about probably food, or we're thinking about some sporting event, and we're just thinking about like anything else in the world because you've lost us, right? So if you mention a number, women, problem solved. So just like explain your day, but just every once in a while be like, so, and this happened at 4:00. And then I sat down with 2 of my friends. And I think hearing that number pulls us back in. Now, what's funny is like my business partner, my really good friend, that we always do like Christmas parties and New Year's parties, and we always do charades, and the men always win. So perhaps that just proves that we're just better, even without descriptive terms. But the men always win every time. Not jumped to any conclusions here. I'm just saying. We always win. And the funniest thing is, you know what the funniest thing is, right? We win with the worst clues ever. So like it's one of these games where your team has to guess a word, but you have like you have a little card, whatever, and you can't say any of the words on the back of it. So like if the word they have to guess is like George Washington, like you can't say like president, you can't say like military, something like that. And swear to God, no lie. So I'll get up there, I'll have like George Washington, and I'll just be like, boom, wig, right? The stupidest clues ever, right? Beard, teeth, like that. And the women they're all smiling. They're like, this idiot. Like, and they're thinking of, oh, you should have said that. You should have said this. And then the men are just like, George Washington. And they're like, what the hell? Every time, I swear. So like it'll be, if we do a trading related example, like the word we have to the word we have to do is like Gartley, for example. So the women will think of words. They'll be like, hey, 4-point move, or they'll be like bird-like, or pattern formation, and I'll just be like, blue. Like what? Blue. Oh, Gartley pattern. Ding. Every time. I don't know how it works, but we win every time. All I can say is winners win. That's the only conclusion I can jump to. Maybe our dumbness just triggers with each other. Maybe the man dumbness is just we're our own dumb language. But it pisses them off every single time. Every single year, it pisses them off. Maybe we're not as dumb as you think. But of course, no. Whatever you think is right. Of course, though. Come on now. We are exactly as dumb as you think. Wink, wink. All right, see what else we have here trading-wise. Kind of scroll through. That's a real story, though. It's weird because I look back at it and they're like, how did you guess shower curtain? I'm like, I don't know, man. I just felt it. and it's like clockwork. Euro Canada. There we go. We got a lesson for anyone out there. Food, man. Just give us food, and men will do whatever you want for food. Like the best text I get from my wife is like, I get a text every once. I do most of the cooking. Every once in a while, I get a text, and like I'll be coming home from a hard day at work. Get a text message. I'm like, what does she want? It'll be like, I made dinner. I'm like, oh, whew, I love you, babe. Best text message I can get. I made you dinner. Yes. Or even just food. She can just text food, and I'm happy. Food ready. Yes. Yes. I'm going to go buy her flowers. All right, Euro Canada. So, daily chart. This is one that's been in a range. Right? Bouncing off highs, bouncing off lows. We have recently put in higher highs as well as higher lows. That's a little bit of a clue. But we're right kind of in the midpoint of this range. And we talked about this the other day where you have this inside level of structure here. And we're hitting that same area there. And as we go down to a lower time frame, you can see that we bounced off that level, right? We came down to this zone, right? The calm before the storm. I believe this is the example we looked at yesterday. And we haven't really retraced that far up, right? We can go higher. So this is an example for you double bottom traders, right? Let's see if price action can retest this zone, if we can get a secondary hold, and it may give you an opportunity to trade it up back towards this level of consolidation. Probably a good point to aim is going to be about right here, about 146.31. You can see that can offer a pretty decent, right? Again, we don't know where this double bottom is actually going to format, but let's just kind of make a prediction and say that we're here, 45.35, so 45.15s. Stops about right here. You can see even to a retest of the previous structure highs, it's going to be more than a 1-to-1. A retest to this higher level right here is going to be more than the 2-to-1 risk reward. So a pretty decent. Oh, that's a lot further. That's closer than I thought. So a pretty decent opportunity if you end up getting a double bottom here. You see we're going to have a 50% right at that level. So I think that's a good place to aim for. Just curious if we where a 127 would be. Swing low to swing high in here. Back down. Look at that. You see that, guys? 127 confluence, right? That 50%. So a good example of, I forgot who asked about it. I think it was maybe Tobias. Asked about kind of narrowing down entries. I'm structure based. So again, my thing is think like the other trader. Ask myself, where do I think price is likely to run into trouble next? And looking at this area, here's what I saw, right? Again, what stood out to me was this big red candle, high momentum candle, this big red candle. And I looked at a little bit of the consolidation in the middle of that zone, right? I also looked left. I saw the lows of this wick in here, right? You see that? Give me a yes. So when I see this, I can automatically, because I've spent way too much time in the market. What does this candlestick combination look like to you in a lower time frame? What do you think? These two green candles. Uno, dos. Probably a little zigzag action, right? Probably something like this, right? We go up, we go down, and then we go up, right? Price action went up. Here's our high watermark for the first candle. Here's our low watermark for the second candle. And then we went up. So it looks like this, right? Again, and you can always go to a lower time frame for confirmation, right? You'll see this. Just when you kind of, again, you spend entirely too much time in front of the markets in price chart, you start to kind of understand this. So I know this looks like a pullback. So we have a nice little zone here, right? This is the bottom of that pullback, which would be basically an outside return. And you have an idea of where those targets should be. And then if you want kind of confluence with that, you can bring in your fibs. Again, I do structure first because that's what matters first and foremost. The fibs are kind of like icing on the cake. Cake, food, man. Fibonacci retracement, swing high to swing low. You can see we have a 50% retracement right in there. And then I was just curious because it looked like it. If you want to take a Fibonacci extension from this swing low to this swing high, we're going to have a 127 right at that same level. So nice Fibonacci confluence, just adding a little bit of extra confirmation, a little tap on the shoulder says, yeah, you're looking at a good level. Decent level to look for targets at. And again, if you're looking at a lower time frame, lo and behold, that area we talked about. You see a little clearer now, the retracement? Yep. And again, you don't need to be able to see this right away, but when you spend entirely too much time in the markets, you will start to see stuff like that. You'll be able to start to read the story that the market gives you. And it's really not too hard once you know what you're looking for. Because again, if we were to isolate these two candles, right? Here's a very easy way to do it. So the first candle starts down here, correct? We know that the wick of the candle at the high tells us what? The wick at the high tells us the extreme that price has gone to, right? Again, looking at this candlestick, right? So we can even measure this out, right? This is kind of like old school. I was always told this, or not told, but I read this in a few books, and I was told this by a few old school traders. Peter Brandt was one of them. That's a trader I highly look up to. He gets a bad rap sometimes on the internet because the internet doesn't like the truth. But awesome trader. One of the reasons he stood out a lot to me, I actually had the honor of talking to him earlier this year, is because he's historically like a 40% trader. So he was one of the ones that I was like, I was at one point in my career, I was kind of feeling bad about being like a 50% trader because everyone on the internet tells you it's bad. And he's one where it's like, hey, I've been profitable for like 20 something straight years. Now I'm only a 40% trader. Which I was kind of cool. But he always said, and there's a handful of books that said a great thing to do is to learn price action. I think Adam Grimes said this too, was to draw it out manually. Like get some old school graph paper, right? And just look at the numbers, right? All you need is open, high, low, close, and you know exactly what the price action did, and draw it out manually. And if you can do that on a daily basis, right, you'll be a lot more in tune with candlesticks. And my first reaction was like, how long is that going to take me to draw stuff out manually? That seems like an extra hassle. Why can't I just look at a chart? But if you think about it, it's when I started digging deeper into candlestick formations, it really helps you look at the story, right? We always tend to look at the result. And that's why some of you guys have problems seeing this, right? We always look at the result. So we say, this is where the candle closed, this is what it did, right? But think about the story of what happened in between it, and you can kind of see what's happening on the lower time frames, right? So again, we look at this candle, this green candle, and we have an open right here. We have a close, let's say, right here, right? And we have a little bit of a wick to the downside. We'll just ignore it, but it's a little bit of movement to the downside. And we have an extreme right here, right? This is our wick, right? So at some point during this candle's life, it did this. It made it up here. And then what did it do after that? Because we didn't close up there. That's the extreme. Yeah, and then we retraced. And then we ended up going down here. So we can easily see that this is the movement. Right? And I'm looking at it on the wrong chart here. Let's go to the 4 hour, because that's where we actually didn't see the cheating version of it. Right? So we saw the movement from that first candle. Now, the second candle, right? We know that the second candle opened at the same place as the close of the previous candle, because that's what it does, right? The second candle opened right here. We have an extreme low that is lower. We had an extreme high that is higher. And we have a close up here. Now, we don't know what order it did it in, but we can make an assumption that because we ended kind of retracing downward, that at some point we came down here, right? Put in that low. And because we closed higher, at some point we came up here. And there's a little bit more squiggly wiggly in that. But we can easily see the retracement in there. So give it a try if you haven't done it already. Give it a try. But yeah, Euro Canada, so potential double bottom here. Decent trading opportunity. It's a good lesson on how we look for targets. Euro Yen is, Euro Aussie. Going back to Euro Aussie. We're looking to break to the downside. So it looks like that small double bottom that we weren't really excited about. It's probably going to be out of the picture. Let's see what else we have here. Junk. Euro Aussie Yen retest the previous structure highs. Let's dig deeper. We're gonna forego our second break and just muscle through these if you guys don't mind. Not that you have a choice anyway, because I've already made up my mind today. But you can see that we're consolidating at previous structure highs here. We're kind of slowly making higher highs, but we haven't had any breakout. We go down here to the 4-hour time frame. We actually do have a higher high again right here. You can see it. We're traced off that level, and now we've come back up to retest it. So it's a selling opportunity. There's not a selling bias here at all. But if you're looking for a kind of a short-term selling opportunity, check this pair out. Again, here on the 4-hour, something you can do if you're aggressive. If you're conservative, on a lower time frame, wait for a smaller double top in that area. If you are a little bit more aggressive, wait for a lower low, lower close. If you're even more aggressive, you could wait for a not a double top. If you're more aggressive, you can wait for a did a whole session on it earlier. Red means yep, sell stop. Yep, sell stop. Underneath if you're aggressive. Now, again, I don't really have a bearish bias here, so it'd be difficult to tell you where to shoot for. I'd be conservative. Structure stands out to me right here, 75 flat. Structure, even handle number, little structure swap zone. Probably a 50% retracement. He's so good. So decent level to shoot for. Yep, to short. Yep, to short. See what this looks like on the lowers. And again, that level, this level that didn't really seem like much on the higher time frames, right? This yellow line, you're probably like, why the heck did Akil draw it in? If you need a clearer view of something, just go down to a time frame. You guys can see the difference here. You got resistance, support, resistance. And again, you have that 50% retracement there. Probably a good level to shoot for targets at. And this actually, do we get a higher high, higher close? Ooh, now here's a good example. It was Max, right? Yeah, Max this morning. We were talking about false breakouts, Max. Yep. So here's a good example, right? Because initially you'd say, oh no, Akil, higher high, higher close. We violated the previous level. I can't look for a short at this level, right? And this is a higher high, higher close. But what happens on the very next candle? It engulfs it. So this is what I would define as a false breakout. When that very next candle engulfs it. Yep. I'm surprised we didn't see a follow through. And this also would have been your lower low, lower close entry. Now again, risk reward wise, I don't know how great this risk reward would have been. That's secondary. Seems like the story of the day is not getting good risk rewards. What are we at? 13. Oh, my ATR is wrong here. Ah, there it goes. Give me a second. AUDJPY. Yeah, you look at his tweezer tops too. Yeah. Well, ATR is 14. I feel like that's not right. Give me a second, guys. Oh, now I got a hidden. I just butchered my Ninja Trader. Anyway, so we'll stay on TradingView. I got a hidden indicator box which I gotta go use, but yeah. So if you're looking at stop loss here, I'm looking at 57s. Again, this one's a tough one where you're probably gonna be right below that 1-to-1 profile. So that's been the story of the day. It seems like decent opportunities, bad risk reward. Canada yen 4 hour. So was this the pair that just came off a pattern formation on the daily? Yep. So this just came off a nice pattern formation on the daily, Gartley. And it looks like we're putting in a smaller one. So we look here, we can see our X to A. I wish I found Ninja is hiding. It's give me 1 second, guys. All right, we'll just keep using this then. I'll retrieve it later. So potential Gartley here. I think. Let me just double check that C leg. Yep, potential Gartley here on Canada yen. And we're looking at an X to A, an A to B, a B to C, and then a CD completion right up here at about 83.37. So pattern traders unite. Potential bear Gartley. And we could have one going in the opposite direction as well. You know, if we, let's say we hold this level, we can end up having X to A to B, B to C, and then a Gartley that way as well. So two potential advanced pattern formations here on Canada yen. Something to keep an eye on as well. All right. And New Zealand yen, Aussie New Zealand, nope. New Zealand Canada, pound Canada. Nope. Oil. Double bottom on gold. Double bottom here on gold. Hard to have a directional bias on gold. But a double bottom. All right. Anything else you guys want to take a look at, or any other questions you guys had? No, yeah, there's no reason to look at the Kiwi. No Monday Q&A, guys. I'm having my solar stuff. It's a U.S. holiday too, but I'm having my solar stuff installed. So no Q&A on Monday. So I'm trying to think. I'm supposed to do like a marathon relay Sunday. I don't even know if I'm gonna have time to do a pre-recorded one on Sunday. But no Q&A Monday. I'll remind you guys. It is, what is it? Veterans Day. Veterans Day. Yep. But I will see you Tuesday in the live room. I'm probably going to be in my other office on Monday, so I'll probably be on the chat for a good amount of the day because the power will be out here, and I'll have a big to-do list to do on Monday. But I'll see you guys hopefully with a Trading Edge video this weekend. I'll try. I got a very busy schedule. But if not, I'll certainly see you guys in the live room again. All right. Until then, plan your trade your plan. Have a great day. And if I don't see you, have a great weekend.